Tesla has had a good run since the year began, and it is fair to say that buying some Tesla shares right now may be a very good decision. No doubt, it is often difficult to determine when it's best to invest in the stock market. However, having the right information could give you a strong edge on making even better decisions. So if you're looking to invest in Tesla stock, this is one video you don't want to miss, as stock investor Chicken Genius reveals why now may be the best time to invest in the stock market. Hello everyone and welcome back to Tesla Tomorrow. The Federal Reserve recently announced a new emergency loan program to boost the capacity of the banking system days after the collapse of Silicon Valley Bank. This program is said to help ensure that banks have the ability to meet the needs of all their depositors. Aside from Silicon Valley Bank, several other banks have a similar profile, holding bonds that have lost value as the Fed has sharply raised interest rates. The Fed has increased interest rates in order to discourage spending, which could in turn reduce inflation on the price of goods and services. But by doing so, it also tightened credit conditions, making it harder for financial institutions to fund themselves. Luckily, after the U.S. Federal Reserve announced this new emergency loan program, American financial services company J.P. Morgan issued a statement approximating the total amount to be used at about $2 trillion. According to a statement released by J.P. Morgan, the Fed Emergency Loan Program may inject up to $2 trillion into the U.S. banking system to aid the struggling banks in the United States amid the ongoing liquidity crunch. Reacting to this, famous YouTuber and stock investor Ken Tang, popularly known as Chicken Genius, stated in a tweet that this could be a buying opportunity for investors. Why has Chicken Genius said this? And what does this mean for Tesla stock? Let's find out. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. The Federal Reserve has constantly said that it is dedicated to lowering inflation rates as much as it can. However, a combination of rising interest rates by the Fed, as well as a persistent surge in the inflation rate, have had heavy consequences on financial institutions and the stock market. When the Fed increases the federal funds rate, which is the interest rate that impacts the stock market, it consequently shrinks the supply of money available for making purchases, leading to higher borrowing costs for businesses, and inevitably affecting the stock market. This is why stock investors like Cathie Wood think that the continuous hike in interest rates by the Fed may be a very bad idea. The statement released by J.P. Morgan stated that the $2 trillion fund issued by the Fed was based on the amount of bonds held by U.S. banks outside the 5 biggest banks. Chicken Genius said in his tweet that while he is still bearish, he believes that the collapse of Silicon Valley Bank will not cause other banks to go under. As much as this will be good information for financial institutions, it could also be good for the stock market. And hopefully, in no distant time, the Federal Reserve may start to cut the federal funds rate to stimulate financial activity. A decrease in interest rates has the opposite effect of a rate hike, serving as a catalyst for growth, which in turn leads to greater profits and a robust economy. It is important to note that while Chicken Genius is a huge fan of the stock market, he is not so much of a Tesla fan. In fact, he once predicted that Tesla's stock price will go as low as $60 in the near future. According to him, this is due to Elon Musk going into the Twitter space and talking about prioritizing car sales over margins, which could affect Tesla's profit and probably lead to demand destruction. Chicken Genius cited Musk's statement that he wishes to sell every car that Tesla makes, and the only way to do this might be to reduce prices for its cars. The popular YouTuber stated that Tesla is at the most dangerous part of the cycle where earnings have not been priced in yet. Chicken Genius has had quite a number of things to say about Tesla. In one of his videos, he discussed how an economic downturn could have a significant effect on Tesla's demand in the future. According to him, the automobile industry is one of the first to be affected during times of economic struggles, as people may not be buying cars since many cannot afford the luxury of buying cars. Talk more of an electric vehicle. The stock investor said sometime last year that he believes that Tesla is facing serious demand destruction, especially in its Chinese market. He added that Tesla's backlog is shrinking in this location, judging by the reduction in wait times for the car. At the same time, Tesla has reduced delivery times in China to as little as a week. Wait times in the United States was also relatively short for Model 3, although it was significantly longer in Europe. Chicken Genius believes that Tesla will be heavily affected by inflation, which may cause it to reduce car prices, leading to demand destruction. In July, the stock investor stated that Tesla will experience a drop in delivery during the second quarter of the year. He stated that the effect of inflation will likely cause car production and delivery to slow down, and indeed this happened. Tesla reported that its profitability was negatively affected by higher costs associated with raw materials, commodities, and logistics, and by the prolonged shutdown of the company's facilities in Shanghai due to restrictions resulting from the pandemic. Since production units in and around Shanghai were closed temporarily due to strict lockdown measures, Tesla only sold 89,000 cars across China during the second quarter of 2022. Although Tesla's global sales during this quarter grew by 27% year over year to over 254,000 units, it fell short of analysts' expectations, somehow proving that Chicken Genius's prediction may be right. But let's not jump into conclusion, as there's something else to consider. Contrary to what Chicken Genius believes, lowered-priced EVs will not adversely affect Tesla's demand. If anything, it will significantly boost it. This is evident in the recent price cut that Tesla had in January after it lowered the prices of some of its cars in China and the United States. It was reported that in the first 3 days of announcing this price cut, Tesla already received around 30,000 orders for its EVs. According to various media reports from China, Tesla saw a significant surge in customer traffic at its stores and tons of new orders after the price reduction was announced. A Tesla executive disclosed that the company delivered more than 10,000 vehicles in China on the first day of the price cut, which is quite interesting considering that local sales decreased by over 40% year over year in December. This is indeed a big sign that Tesla will have a strong hold on its demand irrespective of price cuts. Also, let's not forget that while Tesla was affected by inflation, just as Chicken Genius has predicted last year, the automaker did record significant production during this quarter. Tesla reported adjusted earnings of $2.27 per share on $16.93 billion in revenue in Q2 2022. Also, adjusted earnings per share, or EPS, solidly beat estimates, rising 56.6% compared with the same quarter last year, and revenue matched analyst forecasts, rising 41.6% year over year. While it is true that price cuts may affect Tesla's profit margin, it is important to note that these profit margins are high, and Tesla has an incredible advantage in terms of price control, which allows it to record huge revenue even if it cuts the prices of its cars. Wedbush analyst Dan Ives recently said that Tesla's price cuts will spur demand by 12 to 14% globally in 2023. Likewise, stock investor Garrett Nelson has said that after the price cut, Tesla will see a narrower profit margin but will sell more cars. Tesla's EV market has grown as the automaker continues to push itself to meet demand in the world's biggest car markets. There's no doubt that Tesla now has global scale, something it did not have a few years ago. It also has margin flexibility to make aggressive moves like price cuts in order to gain further market share in this EV arms race. Do you think now is the best time to invest in Tesla stock? Let us know in the comments section. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. We'll see you there.